All right, in this lesson, we're going to review retained earnings. This is something that we've talked about before, but because we're talking about the stockholders' equity section of the balance sheet, really, we're going to review the retained earnings just so that you kind of understand, once again, what the retained earnings is all about. So this is kind of a review of what you might already know. So let's talk a little bit about retained earnings. So stockholders' equities also includes retained earnings. Retained earnings are the amount of the earnings that the company has retained and has decided not to distribute to their shareholders. And the keyword here, since the company was founded. So retained earnings is a cumulative effect on the balance sheet, and it continues to grow ever since the first day the company operated. So if the company has always distributed all of the retained earnings, then there would be no retained earnings. So let's take a look at some calculations here, just so that you know the relationship of retained earnings and how that affects the whole stockholders equity section. So let's assume that we've got a company here, we've got 4 years of earnings, and we're gonna look at each earning one by one. So in the first year, the company did $4,000 of net income. So in that year, they distributed $1,000, which gives them $3,000 that they retained. So they made $4,000. They distributed $1,000, meaning that they retained $3,000. So the ending balance of retained earnings in that first year is $3,000. Then in year two, the company made $7,000. They decided to distribute $3,500 in that year. Therefore, they are keeping $3,500 of that year's net income. Cumulatively, since the start of the company has kept $6,500 of earnings. $3,000 from last year, $3,500 from this year. So again, retained earnings is the cumulative effect of all of the earnings that the company has retained since they first started. If we move on to year three, in year three, the company earned $12,000. They've decided to distribute $4,000, therefore keeping $8,000 in their possession. By doing that, the retained earnings goes from $6,500 to $14,500. Then moving into year four, let's say in year four there was a loss. Obviously, there's a loss, so maybe a dividend is not warranted. Now, it's important to know that the company could have issued a dividend here because they had a positive retained earnings. So remember, you must have retained earnings to be able to pay a dividend. It doesn't say that you have to have this year's net income or this year's retained earnings. It just means if you have retained earnings, you can pay a dividend. So in this case, we've decided not to pay a dividend because we just didn't make money this year, which means all of that $5,000 is going to come from retained earnings. And so we're going to drop our retained earnings from $14,500 down to $9,500. Now, why is that? Well, the whole reason why it's being dropped by $5,000 is, where does that money come from, right? So if I'm in a net loss, that net loss either happens for one of two reasons. What happens afterward happens, one of two things happen. Either the investors are going to have to put money to make the $5,000 loss happen, or it's going to come from prior earnings. So you basically took prior $14,500 earnings to help smooth out your loss in this year four. So we subtracted from our cumulative retained earnings. So now our retained earnings is $9,500. So that's how the retained earnings balance is going to work from year to year. Again, nothing really too new here. I never showed you an example that looked like this just to show you from year to year, but basically retained earnings is the amount the company decides to retain of the income that they've incurred during the period. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.